In a world where markets never sleep and every political decision sends ripples across continents, we're witnessing a fascinating transformation in Indian markets. Picture this. While experts predicted doom for our technology sector, it's surprisingly thriving. Meanwhile, metals that were supposed to shine are losing their luster, and our energy sector is navigating through unprecedented waters. Today, we are peeling back the layers of these market movements to reveal the real story behind the headlines. A story that affects everyone from major corporations to individual investors. Stay with us as we decode these market mysteries and understand what they mean for India's economic future.
The market dynamics since November have indeed been extraordinary. We are observing patterns that challenge conventional wisdom, particularly in how different sectors are responding to international policy shifts. What makes this especially intriguing is how these movements are redefining traditional market relationships.
Let's start with what I find most compelling: the technology sector's remarkable resilience. Despite widespread concerns about offshore outsourcing restrictions, the Nifty IT index has shown impressive strength with a 3.81% gain. This performance stands in stark contrast to initial market fears.
The technology sector's performance truly challenges prevailing assumptions. While concerns about potential restrictions on outsourcing and pressure for local hiring in the US are valid, Indian IT companies have demonstrated exceptional adaptability. However, these firms may need to reimagine their operational strategies, especially regarding their global workforce distribution.
Moving to pharmaceuticals, we're seeing a different narrative unfold. A 2.13% decline in the Nifty Pharma Index reflects mounting concerns about potential changes in US healthcare policies. This sector appears particularly sensitive to policy adjustments.
The pharmaceutical sector's decline carries special significance for Indian generic drug manufacturers. They're navigating through uncertain waters with potential healthcare policy changes and looming global tariffs. It highlights how deeply integrated Indian pharma has become with global healthcare markets.
But perhaps the most dramatic market movement has been in the metal sector. A 9.28% drop in the Nifty Metal Index contradicts initial optimism about benefits from potential anti-China policies. How do you interpret this unexpected turn of events?
This gap between expectation and reality in the metal sector is particularly telling. Despite hopes of benefiting from potential 60% tariffs on Chinese goods, the sector has seen a significant decline. It reminds us that market movements often involve factors beyond immediate policy implications.
The energy sector's 10% decline adds another dimension to this complex narrative. The announced intentions regarding renewable energy projects have created considerable market uncertainty.
Absolutely. The energy sector's response reflects the intricate network of global trade relationships. Indian solar module exporters face uncertainty in the US market while managing their dependence on Chinese solar cell imports. It perfectly illustrates the complex interdependencies in global trade.
In the currency markets, the Indian rupee's 2.93% depreciation against the dollar tells yet another compelling story. The global currency markets are showing equally fascinating movements.
The currency market dynamics are indeed revealing. The dollar's 1.3% decline against major trading partners suggests a broader global realignment. These movements indicate that markets are still processing the implications of potential policy shifts and their worldwide impact.
As we wrap up our analysis today, what crucial insights should our listeners take away from these market movements?
The fundamental lesson is that markets operate as sophisticated, interconnected systems that don't always follow predicted patterns. While policy announcements provide directional signals, actual market movements reflect a complex interplay of multiple factors. In such times, maintaining a balanced, long-term perspective becomes essential for understanding market dynamics.